EURUSD daily markup for Thursday the 5th of October. This is the daily chart. We are bearish. We have had a break of structure, and after a break of structure we can expect price to kind of get into a pullback. The pullback hasn't started yet. We have the prices swept all this liquidity that was residing under these relatively equal lows and even under this low, and we have this very probable demand zone here, and I'm expecting price to probably come here, and from here expect a pullback to maybe happen up to more premium levels, which is maybe somewhere here, maybe somewhere here, and we'll wait and watch. So right now, the way I look at it, there is this bit of a supply zone here, and I'm expecting price might just pull up into this zone and then go down further. So I think it might be like a pullback happening on a lower time frame. We'll watch that. So as of now, it's expecting price to pull up into this supply zone and then go down further, going up to the going down to the H4. This is what the H4 looks like. We've again, H4 is also bearish. We've had a break of structure over here and then expecting a pullback to happen. So probably we could mark this as the weak swing low, and this is the strong swing high, and we can I think the pullback has started because we've had a change of character happening over here, and then maybe we pull up into this. This, as we saw, is a very high probable zone yesterday, because this was a demand. Okay, so if we just break it down, this was the supply zone which got flipped by this demand zone here, and then this demand gave a bit of a reaction, and then this was the supply which took out this point before the liquidation. This was the liquidation that happened, and then this was the zone that led to the point before liquidation to fail. So therefore I think this is a high probable supply zone. So I'm expecting price to kind of pull up into this and then plummet down further. As far as the M15 is concerned, this is where we are. Yesterday I had marked this entire structure, the H4, as my M15, but now I've changed it. I like to generally keep my time frames separate, and there is no hard and fast rule how you want to mark your market structure. As long as you're consistent, I think it'll be fine. So and if you look at it very logically, we've had a break of structure on the H4, and therefore there will be a pullback. So if we are looking at a pullback, then obviously on the lower time frame, which is the M15 will be bullish. We'll have higher highs, higher lows, higher highs, higher lows, till we reach a structure or a place of interest from where we can expect the reversal, the pullback to finish, and then look at shorts from there. So it makes absolute sense to mark your structure in such a way that the M15 is now bullish. So this is where we are. We've had a break of structure. After a break of structure, we can expect price to pull back. Maybe this is the pullback which got over here, and if we look at just the fib, so yes, we definitely we pulled down into discount, and from discount we can looking up now, and I expect this weak swing high to be run over very shortly, and then we kind of move into this zone and look for shorts from here. Now again, this is a nested M15 which is nested inside an H4 which is nested inside a daily. So yeah, everything I think is aligned in terms of this being a very, very high probable zone to look for shorts. So that's it. So I'm as London opens, if there are any longing opportunities with enough risk to reward ratio to reach up to this level, I will look at that. Else wait for price to kind of pull up and then look for shorts.